Hi guys, I think we're just going to give everyone a couple more minutes to attend and make sure everyone's online.
No, yeah, we'll do, go with half ahead, and cut,
I think we should be good to kick off now, Fraser, if you're ready.
Yeah, perfect. No worries, Jack.
Thank you.
Thanks very much. Well, welcome everyone to this afternoon session. So today we're going to be talking about service charges and the role of the auditor. So just a brief introduction about myself. So my name is Fraser Akehurst. I'm a director here at Fortus Business Advisors and Accountants, specialising in service charges and the preparation thereof, the reviews, audits, and some bespoke projects as well. So what we're going to be covering today, kind of want to touch on four key fundamental areas, really. So first of all, to answer the age-old question, I'm sure the question that's on everyone's lips is what actually is an audit? Secondly, how do we actually carry out an audit? Then we're going to compare that to a factual findings report. There's often a bit of confusion between the two and what each one relates to, so we'll try and outline those differences today. And then we'll briefly touch on how that differs to actually the auditing of some corporate accounts. And we'll then with a summary, and there will be time for questions from guys. So I don't know how we've done it previously, whether it's typing questions in the chat, whatever the case may be, but I'm sure Jack will keep an eye on the chat for me if there are any questions that kind of pop up. I've also got Paul Jeps, who's in here with me. He's the head of service charges here at Fortus. He may be interjecting at times and keeping me on the straight and narrow. I know I've only got an hour and I'll try and stick to it, but we'll crack on if everyone's okay. So firstly, really just to capture on that, the question of what is an audit. So the FRC, who are the kind of Financial Reporting Council, their definition on screen there of what an audit is the auditor's objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes the auditor's opinion. Now, if you're like me, when I first started my career in audit, I read that and thought that's fantastic and I understand all those words individually, but collectively I didn't really understand what that was actually asking me to do. The key elements are really around what an auditor's opinion are. Ultimately, the role of the auditor is to come up with an opinion, and that opinion is whether the financial statements are free from material misstatement, i.e. there is no errors in the accounts that are large enough or pervasive enough to upset the users of the accounts. And that is in relation to fraud or error. So if that's because we've accidentally done something or actually a fraudulent occurrence has been carried out within the year. Slightly rarer, but does occur. So now we're kind of a bit more familiar with what an audit is, that we are trying to gather enough evidence to perform enough work that I can helpfully pull together an audit opinion and sign off an audit report that, in best case scenario, says I am happy with these sets of accounts. How do I actually do that? Now, there are two key elements to carry out an audit. There's the actual audit of, if we take the service charge accounts as we're talking about today, there's the audit of those financial statements as at the year end. That's the year end work that we're performing. But there's also a lot of work that goes into the planning and the construction of that test. And a lot of it is actually around identifying and assessing risk. So when we're auditing a set of financial statements, whether that's service charge or corporate, what we as the auditors are trying to figure out is actually, where are the biggest problems here? Where are the biggest risks to these accounts being wrong? So if we take a business that we're all very familiar with, we take Asda, for example. their risk will be around lots of stock. They've got lots of produce that can be stolen or miscounted or misallocated. And they've also got a lot of cash transactions. So if I was to look at the audit of Asda, and thank goodness I don't look after anything that large and complex, it would be looking at whether the stock's allocated and collected correctly and the cash is maintained properly. So when we're doing that with service charge accounts, it's no different whatsoever. Part of our planning process where we work with the client, which is usually the housing association or the managing agent, is actually to understand from them what are the risks with this site. Now, as you guys will be no stranger to, a lot of that has been around fire risk assessments and building safety funds recently. There's been a lot of cash and a lot of large scale transactions going through service charges that have obviously been a risk to us, and we've had to pay close attention to that. Other elements may be service charge collection. It may be complex recharges between linked sites. It may be just the sheer scale and volume of some of the service charges you're dealing with around 1,000 individual tenants who all have a different fee matrix. So the first part number one, is always identifying and assessing the risk. Where are my problems? Once we've identified that risk, it's then actually about obtaining sufficient and appropriate audit evidence. And that's a very key phrase, sufficient and appropriate audit evidence, to provide a basis for the auditor's opinion. So I've identified where my problems could be. I now need to make sure that I've got enough evidence to support the fact that none of those risks have resulted in a material misstatement. And now this is where usually the year-end processes come into play, whereby we'll be doing some sample testing. So we may ask for a sample of your invoices. We may be doing tests of controls, which we'll come on to in a moment, where we may actually come out and want to understand how it is that you process costs or you process payments, or how it is actually that you create a set of service charge accounts. And we'll come on to the differences to factual findings report later, but this is probably a key bit to really take away here. When we're doing an audit, we're not just auditing the figures as they stand at the year end. We're also trying to gain an understanding and actually probably test your systems and your controls that would result in costs coming out of the year end. So as we're trying to understand these costs, we may sit down with your purchase ledger team. We may sit down with your service charge collection team. We may sit down with your actual service charge accountants to understand from them how it is they go from servicing a client to having some costs hit a P&L. And once we've understood that, once we've made sure that we're happy that you guys have a sound basis of controls that doesn't give us any risk, and I want to make it clear there, we're not expressing an opinion on your controls, we're there to understand your controls and how that may create larger amounts of risk. But once we've understood that, we'll then make sure that, and this is less applicable to service charge accounts, that actually the framework that everybody's using, so the accounting policies and the accounting estimates, are relevant and you're disclosing relevant disclosures. So the main one is that whether your accounts are prepared on an accruals basis. If that's the case, we make sure that that's appropriate. It's consistent treatment, so you can't just choose to use that treatment for some of your costs and not for others. And then making sure that there's adequate disclosures within your year-end accounts. So it's all about making sure that how you have chosen to treat your accounts is actually how you treat your accounts consistently. And then that's also how you tell your clients that you're actually doing your accounts. Just making sure that message is consistent throughout. As part of that audit as well, so we're in a situation now, if we're walking through the timeline here, where I've spent some time on site with you guys. I'm happy with your systems. I'm comfortable that they are adequate. I have performed some year-end procedures work on the physical year-end numbers, and I'm happy that there's no material errors that I've identified as part of my testing. I'm happy that the basis for your accounts seem fair and in line with what would hopefully be a set of ICAW TECO 311 service charge accounts as best practice, and that there's no estimates or policies in there that I don't think are suitable. I'd actually then just check that the overall presentation structure and content of the financial statements are fair. Do they give the users of those accounts a fair underlying view of what has actually occurred within the year? Now, again, some of you may use this and others don't, but actually you can use your accounts to, rather than having a director's report, as limited companies may have, you can actually have a report from the housing association or a report from the managing agent, whereby you may talk about some of the problems that have occurred in the year, whether that's been additional cladding works, whether that's been exploratory works, whether there's had to be a large additional levy sent to residents because you're doing some large construction works. Now, obviously, we would actually audit and review the wording used and the narratives given to your clients to make sure that you're not, one, misleading them, whether intentionally or unintentionally, two, quoting any figures that aren't quite correct, and three, ensuring that it is consistent with the numbers and the story that those numbers are providing. And it all comes back to, as we mentioned on the previous slide, ensuring that the financial statements give a true and fair view and are free from material misstatement. That's the whole objective of an auditor. And then once we've kind of understood all of these processes, what underlines, and this is often the bit of work that goes unseen by clients, is actually designing and performing those audit procedures to those risks to actually conduct an audit. Now, this is where you have to be very individual to each set of service charge accounts you're looking at. Auditing a set of single schedule 100 tenant service charge accounts is very different to auditing a 150 schedule 4,000 unit set of service charge accounts with large linked site charges. And we need to make sure that as an auditor, you're adapting your procedures and also your expectations of how you're going to audit that. All that wrapped together is how an auditor would actually go about forming an opinion. So what does that mean in practice? Because I've spoken lots of probably gibberish there that all sounded very hopefully intelligent to you all, but what does that physically mean? So as I said, there's kind of two main stages, which is our planning stage and our execution stage. We also have a completion stage, but I'll come on to that more in a moment. Now, little handshake off to the left is when an auditor is engaged, and any good auditor worth their salt should be ensuring that they follow their technical compliance procedures they need to. So that would be letters of engagement being signed, client take-on procedures, and professional clearance from any previous auditor to ensure there's nothing skew if there's no issues that would stop with the acceptance of the engagement. Now, that planning stage is where we'd be understanding how transactions are approved and costed. Actually, how are costs when a property manager phones up the purchase team and says, we've had a fallen tree, we need someone to get out there. How does that actually flow through to the service charge accounts? We would also be calculating materiality, which, as I said earlier, materiality is the threshold for which we deem a set of accounts to be correct or incorrect to. So anything that is material or greater than materiality, we would deem that as a large enough error that it would be pervasive to the users of the accounts. Anything below materiality, for which there's very large and strict guidelines on how we can actually calculate materiality, anything below that would fall out of scope of the audit report. So that's where we actually calculate that materiality, how it's best calculated to address that risk. And then we'd also actually create our audit methodology. You know, what do I need my team to do? So when Paul would go out and win some more work and we've got some audit procedures that we need to carry out for that client, what is it we need our audit team to do? What is it we need to engage with our client to actually perform? What samples do we need? What amount of testing will we do? What variance analysis will we do? That is all designed at the planning stage. Now, the execution stage, this is probably where most people believe that 95, 100% of the work is actually done, ignoring that planning stage. But this is actually that transactional level testing. So this is where we will get the year-end accounts and we will sample them, we will test them, we will stress test them, we will try and pull them apart and identify any material errors. We might do variance analysis for costs against budget and prior year, which are obviously two very large consistent basis for us to kind of evaluate costs. But obviously we have to also bear in mind budget issues we have at the moment. Utility prices are doubling, tripling, quadrupling. All costs are going up by a rate higher than inflation, which I think is currently around 10%. We can't just expect things to be the same year on year. We have to develop an expectation and test to that. We'll also do lots of things such as completeness testing. So one of the key things, and it's something that was kind of drummed into me as an auditor from when I started my training, is it's very easy to test the things you can see. It's very hard to test for the things that you don't know exist in the accounts but should be there. And that's something we have to put a lot of pressure on, especially when it's completeness of tests. So what we mean by that is ensuring that if you have a monthly gardener visit, you do have 12 months of gardening. If you have some large post-year end invoices that took a while to be approved because it was a December year end and people were on leave, ensuring that those costs are accrued in the correct period. So that's probably one of the stricter tests we do, is around that completeness. And then actually, as I said previously on the other slide about actually reviewing and casting the year-end statements, does everything add up? Does it look right? Is it in the correct fonts? Is it in the correct columns? Does it look good? And is it clear and understandable to your clients? Because ultimately, the whole point of an audit is to add comfort and trust in the numbers, we don't want there to be any silly errors that would then result in that kind of being taken away. And then we have the completion stage. So this is actually the much easier bit for us to do. There's a lot less complexity, with service charge accounts than there are with other types of accounts. So what we're here is actually we're going to check that what we have found out addresses the risks that we identified back in the planning stage. So we always have to come back to the planning stage and make sure we've addressed those risks. We have to make sure that we have gathered enough sufficient audit evidence, as I said earlier. Do we have enough evidence so that if the institute came to me and said, Fraser, how have you come up with this opinion? I could give them a sufficient audit workbook that would contain enough evidence. And then I have to consider the impact of findings on the opinion to be issued. Have I found any errors? Have I found any issues? Have I found anything I need to report back to the client? Or actually, is it going to change my opinion? Is it going to create an adverse opinion? So this is where you may hear people talk about qualified opinions or emphasis of matters. So that's where actually I may have found something that is detrimental to the accounts. It is a material error that hasn't been corrected. And we may need to update our opinion for that. I've just seen fine. If anyone has any questions, obviously, please do fire them into the chat. So that is how the audit would take place in a practical sense. And ultimately, this is the piece of paper that everyone's kind of engaging us to do. This is the audit opinion. So off on the right-hand side of the screen there, you'll see, the first 80% of an audit opinion. But the key element that ultimately we're giving is this opinion piece that I've kind of snippeted off to the left-hand side there larger. Now, what this is our declaration. This is our declaration of our opinion on the service charge accounts. So we have audited the accompanying service charge accounts for the example there for the year ended 31st of January 2022, which comprises of a statement of service charge income and expenditure, a balance sheet, and notes. And what we say then is, in our opinion, the service charge accounts for the year ended are prepared in all material respects in accordance with the accounting policy set out in note 1 to the accounts. That is what we are working towards. That is what all of those previous 6-12 months of work have been working towards, is being able to give that opinion with, I have the trust in what my team's performed and the work that we have evidenced on file to support the figures that you guys have pulled together in your accounts. So it's probably one of those things, and as an auditor, Paul, you can share on this as well, is that this is often the only bit of work that our clients will see that we've done. They will obviously only see maybe a single page audit report, and quite often they may skip past that as they get towards the surplus deficits. But I think it's just worth emphasizing here how much work, as you've seen on the previous slides, actually goes into being able to give this opinion. It's not something that should be given lightly. To give a clean bill of health and an audit opinion takes a lot of documentation, it takes a lot of evidence. And it's why at times you may feel like you've got questions from auditors asking you questions that you think are unnecessary or a bit too intrusive. But it's just to give you that kind of insight there that we have to be watertight and able to provide this opinion. Just a brief narrative there on materiality. It's something I've mentioned a couple of times. So materiality with regards to an audit opinion, it's defined as being an error that would be pervasive to the user's readability of the accounts and judgment on whether to buy goods or services. So that's the FRC description. Now, obviously with service charge accounts, there's no investment in those accounts. There's no one choosing whether to buy goods or services. So actually for service charges, it takes a slightly different definition. And it actually is, it's more pervasive to the user's readability of the accounts and their judgment on what is a fair cost to them as part of the underlying lease agreement for their service charges. So under ISA guidance, a number of approaches to defining materiality can actually be carried out. So if you were to use a not-for-profit organization, such as a charity, you may take gross contributions. If you were to look at an investment company, you would probably take their balance sheet figure. But what we tend to do from an audit perspective, where we're looking at service charge accounts, the largest driver for you guys is expenditure. It's your total expenditure for the period. That lays best in line with what drives the complexity or the scale of the service charge accounts. We've always tended to use that. But again, it's something we have to consider at all three stages. So at beginning, when we're planning, in the middle, when we're actually doing our on-site execution, and at the end, when we're doing our completion work, we have to make sure that our choice of materiality is consistent and appropriate throughout that process. So how is this different to a factual findings report? Now, the word audit is probably used quite interchangeably in the sector, and it's used often incorrectly. People will talk of an audit when actually they mean a factual findings report, and vice versa. Now, an audit is, as I've described previously, is bound by the definition of the FRC. It's required to follow the ISA guidelines, and we are wanting to come together at the end to have an opinion. A factual findings report, as the kind of name suggests, is actually a report of what we have factually found out. There is no need for me to provide an opinion. So often leases will prescribe the required scope of review. The lease is always our Bible. It's what drives what scope of work we should be required to carry out. So again, as any auditor should be asking for your leases to understand what is required. Now, it will say whether an audit or certification is required. Now, until 1980, the word audit was used incorrectly and wasn't always used in its correct definition. So if a lease is dated pre-1980 and requires an audit, we can actually say that that was not what the expectation was of the solicitor that pulled that together, and we can do a certification. If the word audit is used post-1980, we have to infer that that was the requirement that was meant by the solicitor and follow an audit process. Now, TECO 311 is a technical paper written by the ICAW. Every time I do this presentation, I say it's about to be updated, but I've been saying the same thing for a couple of years now. Fingers crossed it's coming, because I think it is needed. But ultimately, for a factual findings report, we follow the TECO 311 guidance, and it clearly defines the testing that's required. As I said previously, with an audit, it's up to the auditor to define their own testing process and how they're going to address those risks. Whereas with the TECO 311, it's a pre-prescribed format. Anyone can gain access to the ICAW TECO 311 release and actually understand what the testing requirements are. Whereas with an audit, it's all down to auditor judgment and what they define the risks to be. So as I said, the agreed upon procedures, or that factual findings report, are only carried out as per the framework. There is no intention to reduce the risk of material misstatement. There is no intention to identify risks. There is no intention to be able to form an opinion. It's a very linear, prescribed format that follows a set processes. And I think that's probably the real key distinction here, is that audits result in an opinion. Factual findings report are purely to follow a pre-prescribed process. Now, rather than issuing an audit report or an audit certificate, we will issue a factual findings report, and it will clearly state all of the work performed and the results of the testing. So if we have vouched a certain amount of invoices and we couldn't find one of them, we would say that we've been unable to vouch an invoice for pound X. If we found that the underlying accounting records did not agree to the year-end accounts, we would state that. Whereas from an audit perspective, as I said previously, we would only report on material errors where we find it pervasive to the users of the accounts. Factual findings report actually also has a very limited review of the controls and systems. So from an audit perspective, I need to understand the control environment. I need to be comfortable that the control environment is suitable and operating as effectively as it should be. From a factual findings report, I just need to understand it, I think is actually the word, is just to understand what the controls and systems are. Now, your interpretation of understand is probably much the same as mine. It's just knowing what's happened, and that is it. So if you're looking for the value added feedback of what an audit will provide, you will not necessarily get that on a factual findings report. You will get someone to understand how the figures have arrived at the destination they are, but no further scrutiny or stress testing will be applied. As I said, it does not give assurance to the users, who are ultimately your clients, that the accounts are materially correct, but it instead certifies that the testing performed was completed. Now, whether you think an audit is better or a factual findings report is better, you can probably argue both ways. And I think, Paul, we've often argued both ways on whether a factual finding report is the best way to do for a certain scheme, or an audit's the best thing to do for a certain scheme. And usually, it's very hard to come up. Size and complexity of a scheme is one big key differential. But ultimately, from a factual findings report, if I find that an invoice is different by 50p, I have to report that, because I am factually stating what is wrong. If I found that the trial balance didn't agree to the year-end accounts by 35 quid, I would state that, because there's no opinion. It's not for me to decide whether I think that £35 is pervasive or not, it's not for me to make an opinion. I am simply there to factually state my findings. Whereas from an audit perspective, I could use my ISA guidelines and my materiality calculations and my assessments of risk to think, does that £35 make a material impact on the accounts? And that would denote whether I would actually comment on that. So from that perspective, you can give more information to the users of the accounts as to where there may be errors. But the flip side of that is that you may end up giving information to the users of the accounts that makes no real impact on those accounts from a size and scale perspective, but may add a bit more fuel to the fire in terms of if they got a few questions. So I think obviously the lease is our go-to. That is what determines whether we should be doing a factual findings review or an audit. But the size and scale of a scheme needs to be taken into consideration as well. Now, as I've said, there's a lot more to do with an audit. We've got to do planning, we've got to do systems work, we've got to understand the entity, we've got to do risk compliance work. So there's a lot more time of the auditor to actually do all that work necessary. And there's actually a lot of it is to comply with the regulations set by the FRC and the ISA guidelines. So with that usually comes an increase in cost. Now, we here at Fortus are very lucky because we're service charge experts. I think we can safe to say that. So we've been able to create the most streamlined and efficient processes we can. But even still, an audit will always take more time than the factual findings review, just due to the inherent risk of it and the inherent extra work that's required. So it is something, again, to bear in mind. Now, as I've said before, any time the word audit's used pre-1980, we can assume that that was not the true intention of the lease writers. I would argue that actually, even post-1980, even though that's the legal standpoint we have to stick to, when the word audit is used, I don't think a true statutory audit is ever really been the true intention of lease writers. It's something we've discussed quite heavily at many NLG conferences with solicitors and those that sit on kind of RICS boards and ICAW boards, whether an audit is the best thing for service charge, or actually TECO 311 that was developed specifically for service charge, albeit we need a slightly updated version now, is the best way to give your clients assurance. And that's kind of the second to last point there. Is it the most suitable approach? Again, it's up for debate. I think there are times when an audit is required. I think there are times when an FFR is more than suitable. I think actually there's a happy medium to be found. And I think, you know, that's something that's definitely been fed back and Fortus has preached about to the Institute. And I think hopefully we'll see that kind of change come in the future. Now, as I've said, kind of re-echo that point there, it discloses all the variance and errors noted as part of our testing, not just the material impacts, whether that's a good thing because you've got nothing going on, or whether that highlights a few of the smaller errors that kind of have occurred there. So that's how it's different. Now, I'm just going to touch briefly actually on how that's different to corporate accounts. Most of the people on this call, you'll all be from corporate bodies, whether that's a housing association, the managing agent, or a supplier to the industry. But corporate accounts will often need to be audited as well. And that's something that we here at Fortus do complete ourselves. Now, as I said, an auditor's role is to gain enough understanding and evidence to form an opinion on the housing association as an entity, not the service charge accounts, when they are auditing the corporate accounts. When we're auditing the service charge accounts, you can flip that statement on its head. We are only worried about the service charge accounts, not the housing association as an entity. And that's all to do with who you're engaged to perform the audit for and what you're certifying on. So if I'm engaged by a housing association to audit the service charge accounts of Kingsmore Road, for example, I'm only concerned about the service charge accounts for Kingsmore Road. If that same housing association then engaged me to audit the accounts for the housing association, I'm only worried about the accounts of that housing association, not the service charge accounts. They're not married together. They are separate opinions that you'd be offering. Now, as much as they're different, the risks that actually apply to each of those are very, very similar. But there are some very, very key differences. So housing association has to sustain and move forward in a not-for-profit making facility and be able to employ many hundreds of individuals to actually look after those service charge accounts. They're dealing with government-backed money. Service charge accounts don't really have a going concern policy that, you know, they collect enough income to offset the costs and they move that forward. One of the examples there, but there's very different risks between the two. Now, it does require a specialist team in the same way that service charge accounts require a specialist team to understand what the risks are and what those bespoke procedures need to be. To actually understand what your corporate accounts need to be audited with as well, you equally need a specialist team. And as I said, it's a separate opinion being offered. So your housing association set of accounts will have a separate opinion for that separate legal entity compared to every single set of service charge accounts they may be responsible for, but will not form part of that opinion and will each have their own opinion. I know elsewhere some suppliers can actually just give a blanket opinion. It's not the way that the ISA guidelines would expect you to do that. Each opinion should be individual to the set of accounts it's being kind of supplied with and based upon. Now, obviously, an audit follows the same compliance requirements. So whether I'm auditing service charge accounts, whether I'm auditing a housing association, or as my example from earlier, or I'm auditing ASDA, I follow the same compliance requirements in the UK for each of them. However, each one has its own nuances. So housing associations, for example, may have audit and risk committees who I have to deal with. Service charges, I need to follow the Landlord and Tenant Act. Each element may have its own legal frameworks that we have to comply with. And that is part of the audit. We have to make sure that those individual sets of accounts are compliant with the legal framework and the legal sector for which they operate in. That's all part of the audit opinion. Now, just to bring this kind of full circle, really, I think although they are separate engagements, although they require separate specialist teams, you can use a team within the same firm. So we here at Fortus, we operate on behalf of lots of different housing associations and managing agents, and our colleagues in the corporate audit world also then operate for them on a corporate level. But the good thing is we can share our understanding. They can understand from us how service charge works, how associations work. And you can actually better understand the risks between the two, and obviously share planning discussions, which ultimately that planning is the most pivotal part of the auditing, and actually is what is usually in practice the difference between a very smooth running audit process and something that doesn't quite go as smooth as it can do. So on balance, and before anyone says no, that isn't me with a shaved head in the picture. So what are the benefits? So whether it's an audit or a factual findings report, what are the benefits to your service charge accounts? Now, these are kind of the 5 key things that we think are the top benefits. I think if I ask Paul to jump in and talk about benefits of service charge accounts and audits and factual findings report, you could certainly fill up to way past 1:15, I think, can you, Paul? But I'm going to try and keep it brief to these 5 points here. So first point being an independent review. A third party of professional experts certifying or expressing an opinion, depending on kind of what scope on your accounts. I don't think you can really measure how powerful that is. We've worked with lots of housing associations and lots of managing agents that have not had their accounts certified or audited previously. And having a third party review of that, one, not only gives a lot more trust building, as we'll come on to your customers, but it also gives you a bit of an evaluation of how you're performing. It lets you know whether you're missing things, whether your procedures are slightly outdated and need to be brought into the 21st century, how other people in the industry are operating. So it's great for that independent review, not only of your accounts, but of your processes as a whole. It's best practice. I think we all aspire to be the best or as close to the best. I think we all, we're all part of the NLG. So I think we all align ourselves to a body that strives for us to perform better than we have done in this industry, to give our clients the best service they can, to operate as successfully as we can, and to give our employees the best chance at feeling happy and fulfilled in their role. So following best practice, and it's one that's set up by many regulatory bodies, whether it's the ICAW, ARMA, NLG is a big purporter, RICS. There are lots of regulatory bodies, and I think there will be more as time moves forward, that either sets this as best practice or a requirement for actually to be part of their body. Obviously, as I mentioned about the independent review, it's trust building. Ultimately, a large amount of the questions and queries that you guys receive, that whether they're Section 21 or Section 22 requests, are probably because those individuals don't trust the numbers that they're seeing. They receive a demand for money and they want to know what's made up. Why do I need to pay this much money? I don't believe that the window cleaners come 6 times a week, or whatever that lack of trust is. But having an independent review that certifies or approves those accounts, it helps you guys probably build relationships with a transparent approach as well, just to actually issue the accounts to residents on the basis that they are fair, they are true, somebody else has double checked these and they're okay. You can trust in us that we're doing a good job. We're following the best practice. We're allowing a third party to review our work, and we feel quite comfortable to share that with you guys. And believe it or not, as much as I've spoken about all the work that goes into it, it's actually quite cost effective. Nearly all instances, and I seldom see occurrences where it can't happen, the cost can actually be recharged to residents. So actually the independent review, the certification or the audit can actually go through the service charge accounts and be charged back to the residents. And the unit price is very inexpensive when you break it down per unit. And it obviously actually results in far fewer complaints and therefore section 21 and 22 requests, as I mentioned, as a result. So actually that little bit of investment up front that you can normally be recharged results in a much more streamlined, happier trust building process that results in less admin of putting out invoices for section 22 requests. And then obviously the bit that probably goes hand in hand with that cost effective is the free bit that gets thrown in on top, really. And that's the expert advice. I've been working with service charge managing agents, housing associations and property managers for over a decade, best part of 13 years now. Paul, I would get you to tell me how many years you've been working with service charge, but I don't want to embarrass you in front of everyone by getting you to quote that number. But, you know, every time, every step of the way when you're involved with experts, you kind of get that free advice. You get that insight into what are the feedback of the challenges you're facing. What processes are you following that actually could be tweaked just a little bit to save you a bit of back pain and result in a much smoother process and transaction for your clients? Is there a slightly different approach that others are following? And that's their year round as well. I think in a stereotypical audit relationship, when it's a set of statutory accounts, that audit relationship happens for the 3 months after the year end. But obviously with service charges and housing associations and managing agents, that's a year round process. So it's there when you need it, which is obviously a very large benefit, which we strongly support. Crikey, I've rattled through that quicker than I have. So I'm slightly ahead of the hour slot that we had, but kind of just want to open the floor up there for Paul to say anything that you've got anything to add there. And then if there's any questions, I did think we had a question earlier, but it was just someone telling me they had to leave, which I'm not going to take personally. But any questions from anyone or anything at all? I mean, feel free to fire away questions or add anything now. My contact details are on the slides if anyone wanted to send me a question afterwards. But yeah, Paul, anything from you?
No, I just wanted to add really, well, first of all, thank you, Fraser, as a brilliant session. I think you covered a lot there, and hopefully it's been helpful and clear for all the users. But I guess the only thing to know, as we're all very aware, personally and in our business roles, that there's a big cost of living crisis going on at the moment, and prices is going through the roof in all aspects of life. And therefore, one of lots of conversations we're having with clients, housing associations, all those in the private sector at the moment, they may not need an audit. They may not need even their accounts to be independently certified. But actually, the value in having that process done at the moment is probably so much more stronger than previously, even just having a sign off by the landlord, because it's providing that independent review from a specialist expert firm, and therefore giving that trust to the leaseholders and your customers, which hopefully in turn results in them, accepting the charges are valid and they've got to pay them without ongoing dialogue and questions and delay pros tactics, which we know lots of customers use at this time. So I think that's just sort of an ongoing conversation we have a lot at the minute, and very relevant.
I was just going to say on that, Paul, actually, if there was a very interesting article, it was written by a very handsome young chap, I can't remember, it was me, in the ARMA AQD recently. So if anyone wanted to see a copy of that or hasn't managed to get one, obviously feel free to drop me an email. Happy to share that article if you wanted some light reading one evening or whatever the case may be. Awesome. Okay. Well, I don't think there's any hands up or any more questions from anyone. Like I said, feel free to reach out if there are any questions. Jack, I guess if there's nothing else, we'll end that one there.
So it's just
Yeah.
just one final.
Oh,
sorry, just one final comment. The only question in the chat was the person was leaving, so obviously had other commitments, but did ask if we could get the video, and they will all be shared up on this video anyway, certainly, and I'm sure all of them will be on the NLG website.
That's right.
But this one in particular will be on the Fortus website as well, so you can come and find it there. And yeah, and also you'll be able to pick up on various other bits of useful information from our website.
Awesome. Thank you, everybody. Thanks for attending. Yeah, Jack, over to you, I think.
Yeah, no, perfect. As you said, Paul, we'll share all of the recordings for all of the sessions after the event. But yeah, thanks both.
No worries. Thanks, everyone. Appreciate your time.
Thank you. Thanks.
Cheers, guys.